This was a quarter where we posted double-digit growth on top-line revenue and earnings per share, but we did not deliver on our same-store comparable expectation that we had internally, and we're accountable for that. And so strategically, we're focused on our two targeted long-term growth markets of the U.S. and China. We've got a clear action plan in each of those cases that we outlined yesterday for investors on our call. And I think we're seeing good signs that that the action plan we have in place in the U.S. is helping us build some momentum. And we outlined the set of things we're doing in China to enable delivery in our stores. Now, U.S. and China, two very different markets, clearly.
Yeah, well, all right, tell me about the U.S. You just said you're starting to see some momentum in terms of the things you're doing. So give us some specifics in terms of what is encouraging you.
Yeah, well, first of all, in the U.S., in the morning day part, we are growing transactions, we're growing comp. Our core business in the morning is healthy and strong. When we look at our core beverage platforms, coffee, espresso, tea, refreshers, all growing. The challenges we're having in the U.S. relate to the afternoon day part where we've seen some declines, and specifically around the category of blended, our Frappuccino business. So the actions we've taken really in terms of launching our afternoon products and really driving some beverage innovation around cold beverages is helping us shore up that afternoon day part.
And talk a bit about China here, where you had a negative 2% comp. Now I know the Chinese market, as you have said, is not necessarily about same-store sales as much as it's about overall sales because you're opening so many new locations. But nonetheless, you did for the first time seem to indicate at least there is competition there that you're starting to see. Is it worrisome to you at the higher end that there are new competitors in China who may be taking share?
Well, first of all, as you pointed out, David, China is all about new store growth. We are building our footprint in China. We're just north of 3,400 stores. We've increased our net new store builds to 600 per year. We're entering 100 new cities over the next 3 years in China. All of those cities are larger than the city of Los Angeles, so big opportunity in China. This past quarter, we grew transactions in China in the mid-teens, and that was driven by that new store growth. So building out the footprint of Starbucks in China is the priority. And clearly, we've demonstrated that there is a great business in coffee in China, and so we're going to have a lot of competition, and we're used to that. We've always had competition, and we're seeing a bit more of that in China, but we're going to stick to our strategy and to our game. We've been in China for 20 years, and we're going to continue to build new stores and build out the brand around premium coffee, a premium experience, and custom handcrafted beverages at scale.
Kevin, it's Sarah. I'm wondering if you think the credibility toward the stock has taken a hit lately because of some of the big management shakeup issues. First Schultz, and then the somewhat surprising resignation of the CFO. When I talk to investors, they're still sort of shell-shocked from this. Do you think that that's impacting the stock's valuation?
Well, Sarah, first of all, I think if we look at the transition that Howard and I have orchestrated, this has been a multi-year transition. And I think it's been very thoughtful and very intentional every step of the way. So, I don't necessarily consider that, to be sort of an abrupt change. That said, Howard's an iconic merchant and, the founder of the modern day Starbucks. And so, those transitions should be thoughtful and intentional, and that's how we've handled that. In the case of Scott, certainly his decision to retire, and we thank Scott for his contribution, and he's going to continue through November and then in a consulting role. So that too will be a very smooth, successful transition. And so I think we're handling these in exactly the right way. We're positioning Starbucks for the future. This past year we've streamlined the company, focusing more on our core business. We outlined our action plans yesterday, and I feel like we have line of sight to the things we have to go do, and now it's up to us to go execute.
Kevin, it's Melissa Lee. I think that the question that investors are grappling with is, are Starbucks' best growth days behind it? I mean, we're taking a look at your biggest core markets, and when you take a look at last year's same-store sales in the U.S., for instance, they were, up 5%, and this year they're up 1%. In China last year, they're up 7%. This year, they're down 2%. You just take a look at that, and you wonder, is Starbucks reaching a saturation point here?
Well, look, certainly this quarter we posted a top-line revenue growth of 11% and earnings per share of 13%. Now, certainly the U.S. is in a very different stage of growth than China. The U.S., we have to be much more driving on same-store comps. China is about growing new stores. And we have significant growth opportunity, long-term growth opportunity in China. In the U.S., when we look at where we're building new stores, we have growth opportunity through Middle America and the South. And then with the latest Global Coffee Alliance agreement that we struck with Nestle, we have the opportunity to take the Starbucks brand to CPG channels in 189 countries that Nestle has a presence in. So, clearly we're driving growth at scale, and we think we've got a solid set of strategic priorities, and we're executing against those.
Wanted to ask you a question about President Trump. We're waiting for him to speak at the White House on the South Lawn right now, just after getting that 4.1% economic growth figure. Do you think that this is a direct result of President Trump's stimulative policies?
I'm sorry, I didn't understand the question. Do I think what's a direct result?
The stronger economy, the 4.1% economic growth figure we just reported, fastest growth since back in 2014.
Well, certainly the economy is doing well, and I think over many years since since the macroeconomic challenges we faced a decade ago, we've been on a recovery path, and I think there's a lot of factors that contribute to it. But we see unemployment low, and we see a healthy economy.